It's about that time of day again, folks. Welcome back, welcome back. You know what time it is, 7:30 a.m., Monday through Friday. I got Marty Errico here with me from Traders Audio. My name is Joseph James from School of Trade, and welcome to your crude oil squawk. Guys, we've got some great strategies, some great trading strategies this morning for you, and we're going to provide you with a very unique look at preparing for your day of trading for crude oil and natural gas futures. Welcome aboard. My name is Joseph James. I'm a technical analyst working in a home office here in Los Angeles, California. I run a live trade room Monday through Friday with students from around the world at schooloftrade.com. Come out and join me any morning here this morning, 8 a.m. Eastern Time. We open up our live trade room, and there's plenty of information on our website about that. I'm also going to provide you with a top-down approach this morning. The top-down approach means I'm going to start with a weekly chart, move down to a daily, down to hourlies, and we're going to go all the way down to those fast minute charts where we'll analyze the overnight trading session, we'll look at what's happened coming out of London, we'll anticipate the direction at the open, right? If I can anticipate the direction at the open, I can then determine where the high percentage trading opportunities will be located. So if I can tell the direction we're headed in and then find the price levels on the chart that we can use to enter in that direction, that will be where the highest percentage trading opportunities will be that day. If I can participate in the highest percentage opportunities, well, it's just like putting all your money on a strong hand at poker, right? Find those high percentage opportunities. Those are the ones you want to trade with. And of course, we'll be looking for those trades starting as early as 8 a.m. Eastern Time this morning. So we're just about ready to get that started. Now, once I'm done with you this morning, we're going to head all the way across the continent from Los Angeles all the way to New York City, and we're going to talk to Marty Errico. Marty has a very unique way of helping us prepare each morning. He's our pit analyst, and he's going to be analyzing market direction, intermarket divergence, market internals, of course, the most important option prices that he's seeing right now, and the very, very important and often a little bit elusive, those pit session trading levels. Guys, for all of you chartists out there, for all of us technical analysts out there, for all the people that use charts to make a living, right, or to trade with, or to analyze, Marty's going to provide us with a very unique look at how the pit session traders are going to be looking at charts, right? Most traders in the pit will use slightly different levels than we use here in a home office. So we've got an exciting prep here for you this morning. Without any further delay, let's jump right into it. The first thing I want to do today is I want to jump right over to a daily chart, because the daily chart this morning is telling us something. And one thing we can see right away here on the daily chart is we know we get the price wedge. This price wedge has been here for, boy, quite some time. If you really want to get crazy, look at a weekly chart, right? The weekly chart shows us even more wedging. So you can see, you know, I get people all the time, they ask me, why do you think that crude oil is sloppy and choppy right now? So, well, look at the chart. You're at the end of a wedge. We're going to consolidate here week after week until something happens. Something dramatic will happen. Usually it will be a fundamental occurrence in the marketplace, geopolitical, a natural disaster. Well, we're seeing consumer confidence growing week after week. So something's going to happen here. We just have to be patient to wait for when that something occurs. The weekly chart is relatively useless right now because we can see we're only on Thursday. We'll talk about that weekly chart later on in the week, beginning and end of the week. I like to look at this daily chart because in the daily chart this morning, you can see we are literally tucked right in below the top of this price wedge. Now, you might be thinking, but Joe, this wedge, the same high, the same level? Yeah. I mean, remember, until we break above this high, this price wedge is still in play. So we tried to break above it. If you recall last week, remember how we said, there's no way we're not going to test 100. Everybody's talking about 100, right? All the water cooler chit-chat last week, right, about 100 or 2 weeks ago. So now we come in and we go, okay, well, they failed to push 100. They've collapsed back down into the range below it. We're resting now at the top of this wedge. We know we have some bullish sentiment in the market. You can see we have a very symmetrical, right, move going higher. Guys, it looks like we are trying to move higher, but boy, we've got our work cut out for us at the top of this wedge. So the daily chart's giving us a little bit of a clue as far as why we have this feeling that we're hitting our head right against the wall here. This 96.15, 96.17 area on a 4-hour chart really illustrates my point. You look at a 4-hour chart of crude oil now and move down to a 4-hour, and we can see right away here that we've been bouncing off this 96.17 area. 96.17, you can see the bullish channel. You can see the bullish trend. It's been very evident. The consumers have been confident. Durable goods orders building confidence. New home sales building confidence. Right? So we can tell the bullish trend is here. We know partly why. And of course, don't forget, it's the summertime. And you know that self-fulfilling prophecy, this summertime usually leads to higher gas prices. Right? Whether or not that be the reality or not, that is perception of the market. So we know that the value is there. We know that the perception of higher prices is there. But as you can see, when we zoom in on the 4-hour chart, though, we really, again, have kind of banged our head against this 96.17 area. So all we can do right now is wait to see if we can get, in this case, this is a 4-hour candle. If we can get a 4-hour chart to close above 96.17, we're looking good. We are inside of a sell zone, as you can tell right now, so we will look to go up to the 97.08 from there. So look to be buying pullbacks here above 96.17 this morning, 96.17 this morning. That will be a very important price level to look for. We can also see that if price is to collapse here and move lower, we have another level of support below us that will enable us now to get into this trade going long. All right, so we have the 96.17, a break above that. We're looking to buy pullbacks. It does look like we are going to pull back slightly right now before we go higher. And I say that because I'm looking over at my 60-minute chart. Let's now take a look at a 60-minute chart on the crude oil futures right now. And you're going to see here another set of important clues. Now, this 60-minute chart, there's a lot going on this chart. Okay, a lot on this chart to be paying attention to. First of all, if you look at the major highs to the major lows, so way upper left-hand corner down to the lows here, right? That's going to give us all of the sell zones overhead. Then we take the lows up to the highs, and now we have the buy zones below us. So as you can see here, we have quite the narrowing, consolidating trading range here. And of course, I call that a wedge. You may call it a pennant or a flag pattern. This is a bullish flag, a bullish wedge, right? We've got higher lows. Now, we do have what appears to be a double top-ish, right, wedge we have here. It is a lower high. We can see it is slightly lower, right, but we can definitely illustrate now this price wedge. Now, does anybody remember what happened with the price wedge yesterday? Absolutely. Remember this wedge? If you go back in time, if you recall, we had drafted this wedge yesterday morning. And the wedge yesterday, we bought the lows, sold the highs, right? Now that wedge has been broken. And so now, of course, we'll do the same thing once again. So a price wedge tells me right away, two-sided trading. Price wedge tells me right away, avoid the middle, buy the low, sell the high of this trading range. It's very, very easy to see that right here, right now, we want to be patient. I've got 95.44. 95.44 is going to be a level here that I'll be looking to buy, 95.44. That is the lows of that wedge. If price happens to tumble like it did yesterday, right? Look at this candlestick here from yesterday. Remember that one, right? Price pushed lower and then whoop, came right back up. We bought that yesterday morning, right? When it came back up. Same thing will apply today. If we head into this buy zone below, we know if we get anywhere near the 94.42, 94.61, 94.99, guys, don't be greedy. Just wait for it. Be patient. Wait for it to test. Wait for it to reverse. And once it reverses, you got them beat. You got those sellers beat. Once this thing starts to reverse, that's when we've got the big money trade on the morning here. So we're looking to buy the lows, looking to sell the highs. 96.17. 96.17 is the line in the sand here on this 4-hour chart, 60-minute chart as well. And we can see here we do have overhead resistance above us. So again, I'm selling highs, I'm buying lows. If price breaks out, we're going to run right into our sell zone overhead at 96.94. I'm sorry, 96.71 to 95.94. So as price goes higher, we are most likely going to see this price continue to show two-sided trading here this morning. If I happen to be wrong, if these bulls come out the gate, and if those bulls are strong, we know what happens. Sometimes this market likes to run. If we get into the marketplace this morning after 8 o'clock and we start seeing 8:30 jobless claims is bullish, personal income is bullish, if we've got a dollar that starts to sink, if we've got prices on the rise and we can tell the market personality is bullish, we will then, above that 96.17, begin buying pullbacks. Now, you might be saying, but Joe, how do we define this market personality? Well, one way that I'll use to define the market personality is if I'm seeing my shorts break down. If I take a short trade and what we feel from that short position is that the sellers are getting beat up along the way, they're having a hard time making new lower lows, we know exactly what a good trade looks like and feels like and smells like, right? We've been doing this for a long time. So in our live trade room, if I'm selling these highs and I start to see, boy, the shorts just aren't working, that's when we know. All right? The market is excellent at giving you instant feedback. I don't need to wait for tomorrow to figure out if they worked or not. I'm going to get an instant feedback directly from those buyers. So the moment we get above 96.17, if we see those buyers are too strong, I'm going to abandon the sell side and I'm going to start buying pullbacks again. Because again, we keep talking about this consumer confidence, this market sentiment to the upside. Even though we have a price wedge, eventually the market personality may tell us we've got to throw that plan in the trash can and start buying pullbacks. The ideal scenario this morning would be a pullback here into a buy at 95.44. That would be the ideal scenario. I would love to get long here down around the lows of this range, just like we saw yesterday, right? That was a great example yesterday, which of course exactly what we had anticipated this yesterday morning as well. So be patient on that this morning. Let's finish up here with a 5-minute, and then we'll go see what Marty's doing in the pit. Here's the 5-minute chart now on crude oil. What a narrow range. Look at this narrow range. Now, a narrow range usually means we've got a breakout coming. Okay, narrow range usually means we have a breakout coming. And you can see here, this narrow range, we've moved $0.50, right? 55 cents. Now, do you recall yesterday morning? If you recall yesterday morning, we had moved a full dollar. And you might have remembered, if you were here yesterday, you might recall that I said yesterday was a typical overnight range, which means that we had to be patient. This morning, we see a very narrow, consolidated trading range. And a consolidated trading range often means that we are waiting on something before we, bam, break out. What's that something going to be? It could be a political announcement. It could be a natural disaster. It could be, I don't know, jobless claims and personal income at 8:30 this morning. 8:30 a.m. news this morning. We've got 2 major news events this morning. Maybe that's what we're waiting for this morning. Jobless claims ticked up last week, right? Remember, ticking up is bad, right? Ticking down is good for jobless claims. We saw higher than expected jobless claims last week, but we do have an overall downtrend in those jobless claims. I would expect here, if we see bullish jobless claims, right, lower or higher personal income, lower jobless claims, this might be all we need here to begin to jump. Now, like I said before, I am going to treat this as a two-sided market personality first, but I will abandon that if we do start to see, if I get short here and it whoop keeps going, we know right away we're going long, right? We know right away. So first things first, resistance levels overhead. 96.12 to 96.26. That's my reversal zone. Members of mine, don't forget, previous high of day, 96.14, 96.17. We call that the inside-out setup. So keep an eye on the inside-out setup this morning if you're a member of mine. 96.43, 96.43, 96.63, and 96.94. Now, my plan is always the same. Rather than trying to predict the breakout, I'll wait for price to go up, and once it consolidates and then reverses, that's when I'm looking for the short. If that short doesn't work out and it appears the bulls are in definite charge, then I'll make that educated decision. This is no longer a sideways range, right? We are trending higher, and I'll be buying pullbacks this morning on crude. So those are the levels I'm looking for overhead. Again, as price moves higher, I will look to sell at each one of these resistance levels. Okay, those are the easy trades. The more difficult trades would be once we get above 96.26, buying a pullback. Okay, going higher, taking profit at the levels above us. So it's always a little bit more difficult, right, to anticipate the breakout unless, like I've said before, unless we see that just blatant market personality. And we'll be looking for that first thing this morning. We move to the downside now, and we have a reversal zone here starting at 95.62. Now, I updated our blog earlier this morning. I like to get the blog updated before we start this today. So head over to Crude Squawk. There's a link for it right on the homepage of our blog at Sideways Markets. And on our blog this morning, I've posted this chart already. And my exact words were, we are bullish in the short term at the lows of this reversal zone. So here we are bouncing off the reversal zone. As you can see, we've already done this once, right? There's your first trading opportunity of the morning right there, bouncing off the 95.62. So we now will expect price will attempt to go up to 96.12. I am bullish at this time on crude oil up to 96.12. At that point, I will have to take my profit, and I will have to wait here to see what happens next. Additional support levels below us, guys. I've got 95.35 is a swing low there, 95.29. So think of that as just a little buy zone there for you. Okay, then we have the 95.10, and then this is that sweet spot that we found on the 60-minute chart. Remember how I said we'd like to get us down to that 94.55 area? Well, here we are now, 94.91, 94.62, 94.78, right? So this is that sweet spot that I was talking about. We'd love to get price to pull back to and then get in for the long trade, again, if you're paying attention on that 60-minute chart with me earlier this morning. So those are my levels here this morning. Levels of support below me, levels of resistance above me. Daily chart tells us we're bullish in the long term. Weekly chart tells us we're bullish. 4-hour chart tells us two-sided trading. 4-hour chart tells us we're bullish. 60-minute chart tells us we're two-sided. And you can see here this 5-minute chart with this very narrow trading range coming out of London. Well, this goes ahead and tells us that, yes, we are two-sided at this time, but be aware, something is coming. Something is coming. And we're going to assume that something is most likely going to be to the upside. Now, there's something out there that may completely blow this plan out of the water, and that's the 8:30 a.m. news. But I'm also curious to hear what Marty has to say, because I'm curious. I'm seeing bullish tendencies here, but I'm seeing two-sided, narrow trading right now. I'm thinking we're going to jump to the upside here, but in all reality, boy, what do I know, right? I'm just a lonely old day trader. They don't call my office to figure out which direction they're going to go in. Marty, what are you thinking here this morning for us, bud?
Well, JJ, I feel like you're looking at my notes, man. I feel like you got my notes in your hand or something, man. Okay, so, well, I'm thinking same exact thing almost. I'm thinking here above 96.20, we can see upside activity, obviously with that being the high end of our range, of course. So we're going to be looking for a break out of the range, right? So we've been in this consolidation for, boy, this last couple days. And earlier this morning when I first woke up around 5 in the morning, I saw us trading up at 96 bucks. So I said, oh, a good start to the day here. Obviously above yesterday's pit session high. So that's a good thing for the pit session. Now, we didn't breach the 96.18 or 17 level that you were talking about. We didn't breach the 96.20 level either yet. So once we see a test of that, which we would probably see after jobless claims and our numbers that were released at 8:30 today, right? That would be the variable to move those markets. So just real quick, let's talk about some data. Obviously, we had inventories yesterday. Inventories were kind of mixed. As you can see, this very sideways type range that we had yesterday. Let's just take a look at the board here. Again, we have jobs claims 8:30, personal income and spending or outlays, whatever one you want to call it, 8:30 as well. 10 o'clock, I got pending home sales. I'm going to be watching all three of those news events. They're going to be pretty important. And then we have the EIA petroleum status, EIA natty gas report at 10:30, and then we also have some Kansas City Fed manufacturing index at 11. So that's not too important. I'm just going to be watching those first three news events, and then obviously the EIA natty gas. So you can see crude has been trading sideways within range. We turn to our multiple market divergence, and we see RBOB and heating oil, very similar type range, very sideways type trading. Again, they're in the pretty much same scenario. Near a major level like 96.20, and once we break above those levels, we can see upside activity. So our other markets are really supporting this as we turn to Brent, as we turn to RBOB heating oil, right? So we're seeing that in our other major markets this morning. The Brent crude is just up about 50 cents this morning so far at 102.08. So really kind of Brent's also creeping its way higher. We can possibly see crude follow Brent higher. So I would hold on to that for a while and not forget about that. This morning we turn to our spreads as well, and our spreads right now are kind of looking bullish for the most part here, giving us a mid-range indication to bullish type indication. So the variable here is the break above 96.20 for the pit session, and we can trade higher, right? Want to get above those 96.20s and the 96.50s, and then we can see possible high end of the range. Now, before I talk about what happened in the pit yesterday, which is definitely going to line up for some bullish activity, I just want to talk about the spreads. So this morning here we see your Brent WTI spread about 625, right? In contango just a bit. So that's bullish. We turn to our calendar spreads and we look at the Augie SEP, Augie October, Augie Novi, and Augie Dees right now, and they're all pretty much your mid-range to contango. The first two spreads here, we're talking Augie SEP and Augie Oct right now, they're in contango. The other two are just basically unchanged on the day. The other two, I'm meaning August, November, August, December. So they're mid-range, just giving us that type of sideways chop trade evidence. We turn to our dollar index, as always the case, and you can see your dollar's lower this morning. Again, so your dollar's just fading off of its high prints that it made up at 83.27.5 from yesterday, right? Remember 83.27.5 from yesterday. So now we fade off the highs and we trade sideways. Keep in mind we are pretty much getting down towards the lows. Our lows in the dollar are down at 83.02, so we're just almost about 8 cents or so, 8 points away from them. So we're going to be seeing that low probably get touched on the dollar. Now, don't get me wrong, this news today will move the dollar, obviously at 8:30 and 8:30 and 9 o'clock, 10 o'clock news. That's all going to move this dollar. So we do have a risk-on sentiment this morning. Again, your dollar's lower, the rest of your markets are higher. So our supply-demand differential is telling us it's higher to sideways, right? Our multiple market divergence is telling us higher to sideways. Just we have to breach a level, and our currency differential, risk-on, risk-off sentiment, is telling us to follow the dollar here, to use the inverse correlation with dollar, and that's sideways. So as JJ was mentioning earlier, he said that we're in this little bit of a wedge, right? And I agree we are in that wedge, and that simply just means to me that there is consolidation, and there's going to be evidence of a breakout very shortly, right? That's all a wedge is. It's basically consolidation, and consolidation is our first key piece of evidence for breakout. So if we get that opening print above those 96.20s, we can go long. Again, get up above 96.5, start buying pullbacks above them, and get all the way up to 97.5. We also want to talk about the downside as well. So today we'll get to our levels. Of course, we have our daily pivot at 94.93. 94.90 was a decent level that we were using yesterday to define the lower end and that break level of 94.93. So I think that's a fair level to call our daily pivot, of course, and if we break below that, we could see us trade down to 93.5, which is the low end of our channel wedge, or really the low end of our range, if you will. So we kind of just went over all our variables right there. Now let's talk about what happened in the pit before we talk about levels. In the pit yesterday, we saw some big volume come in terms of just size to the upside. Now we have been seeing, obviously, the larger traders, like the dealers and the brokers, they have been net long. Locals start to show their hand a bit. If you're listening to the commentary last night, again, larger locals start to show their hand, and they start to show that they are kind of getting a little net long, some larger guys. Of course, the smaller guys, half pint players, if you will, they have been just kind of scalping around positions, and they always have been just kind of in and out, so they haven't been long. But some larger locals kind of start to show that they're getting long. We also have been watching that 97.5 strike level. Again, in the weekly options, they expire tomorrow at 2:30, the weekly options, right? The short-term daily and the weeklies we like to watch. A lot of buying in the 95.5 and 97.5, so that's always bullish. No downside at all in those weekly or the weekly or the daily options. In the monthly, though, we saw obviously 95 halves, 97 halves, 98 halves, hundreds, and 102s to the upside, 102 halves as well to the upside. Downside, we see just really $90 is like the big strike level that they place their money in, just to, I guess, massage around risk and to have some downside covered, if you ask me. So that's basically what we saw in the pit yesterday. And let's take a quick look at some levels, and we'll look out natural gas then. All right, so natural gas, now we're looking at, crude, now we're looking at natural gas next, is always the case. So here's a couple variables now. Crude, trading above yesterday's range, right? Right now we're currently just trading at about 90, no idea why that just happened, 95.75, right? Volatility has been coming in. That's always bullish. Now, volatility was just, it's at 22% right now and on the implied volatility. So as vol comes in, we can trade higher. And volatility has been coming in both on, actually on all four of the indexes that we watch. That's the implied volatility, the OVX. We're also looking at the front vol and vol index. They all are at 22%. They're all coming in, so that's very bullish. Open interest this morning rising just a bit, 282,343, but still around that 280,000. So it just shows that there's no big change in shorts or longs kind of coming into the market. That's also bullish. So again, volatility up to 22%, down to 22%, I should say, so that's bullish. And open interest not really changing. Alrighty, let's get to those levels here. Pit session high from yesterday, 95.60. Your low, 93.68. We end up closing and selling the day at 95.51. We had a net change of about 42 ticks to the upside yesterday at about $1.92 range. If you look with me here, you see your daily pivot today is going to be at 94.93, which we are trading above at the moment. And again, if we get below that level, we could possibly see that low from yesterday. But again, we are trading above daily pivot quite significantly with some strength. That's 94.93. Resistance above, I got 96.18, 96.85, 98.77, and 99 even is going to be our resistance above. So each level you want to see, what you basically want to see is clear these levels. And it's funny, I did not put that 96.18. That is the exact calculation for the pivot, so you can do them yourself if you want. But again, they're posted up here on the board on the trading floor, and I just kind of did them by hand. I do them by hand every day. So once again, ladies and gentlemen, that 96.18, if you basically take that daily pivot times it by 2 and minus it by the low, you're going to get 96.18, and that's a very important level. So if we pop above there and then we can hold that, buy pullbacks up to 96.85, we can hold above that, 96.50 and 96.85, we can hold above them, we'll be up to that high of the range in no time. Support down below, 94.26, 93.01, and 91.09. Once again, those are your levels of support, resistance above and below, and I mentioned those large strike levels that were traded in the pit yesterday. All right, so RBOB and heating oil also showing that sideways activity. As I mentioned again, they continue to be sideways and waiting for a breakout, as they are in a very narrowing range as well, in that little bit of a consolidated mode. So all three products, all four products, even Brent, they're all in the consolidation mode. They're waiting for the next story to move crude together. As my friend Elliot Warren says down here on the trading floor, crude always waiting for its next news event or for its next variable to move the market. Always waiting for some type of news, geopolitical news, any type of news that will move the market. So again, crude always waiting for the next story to move it. Natural gas, ladies and gentlemen, again, we had expiration of the July contract yesterday, and now we're in August, front month. We wanted to get that settle around 365 to 375, and they got it, and they held it, and that's where the most open interest was. That's why we ended up settling over there. But now, ladies and gentlemen, what we have is just a little bit of a different here, shaping up to be now, guys. We're going to be looking at a little bit of a bullish type sentiment in this market, warmer than expected weather patterns coming into this market that could push it up. Today we have inventories. We're looking at 88 BCF, so the prepared for the inventory number. But again, look for a little bit of a bullish tone in the next few days. I'm not saying today, in the next few days, because of this weather pattern that's coming in that's warmer than expected, creating cooling demand. Natural gas pit session high, 374.20. The low, 367.5. We end up closing the sell of the day at 370.380, just 2 ticks below 374 even. This morning, your daily pivot's going to be at 371.80 with resistance above at 376.10. 378.5. Once again, that's 378.5. And I got 385.20. Support down below, 369.40, 365.10, and 358.40. So again, ladies and gentlemen, volatility is above 30%. Now this morning, volatility is also trading above 30%, just at about 32%. And we have been and continue to be watching open interest 175,805, just ticking down just a bit, indicating shorts are getting out of the market. Alrighty, guys, that's it for me here. I'm going to throw it back over to JJ. I'll see you all in about 45 minutes. Again, claims are coming out in just about 25 minutes, inside of 25 minutes, ladies and gentlemen, for those claims. I'll see you then.
Marty, thank you so much, my friend, as always. All right, guys, you know what time of day it is now, 8 o'clock Eastern Time. It's time to sign off here. Thank you so much for coming in and joining us this morning. We'll see you guys 23 hours and 30 minutes from now for a finally Friday edition of our crude oil morning prep, going from the screen to the floor. I'm looking at 96.17 on crude oil. Marty just confirmed 96.20 on the pit session levels. Sounds like we're right on the same page here. Guys, I want to remind you, we're always looking for your feedback. Please post your feedback. Please share that feedback with us. We look forward to hearing your feedback. And don't forget, you can head right over to the Crude Oil Squawk blog. Head right over to the Crude Oil Squawk blog. Head to sidewaysmarkets.com. And at the top of the page, you're going to see a link right there for your crude oil squawk and prep. So head over to sidewaysmarkets.com, and you'll see the link right there for it. And, of course, every morning we have all the charts and a full video recording on what we've done this morning. As always, we appreciate your feedback. We appreciate you all being here today, and we look forward to seeing you here tomorrow. Have a great Thursday. Be aware we've got news in 25 minutes, and we're going to be anxious to see what those jobless claims and personal income reports come out as, so we can get to trading here on crude oil. You guys have a great day. Remember to learn it so you can earn it, and we'll see you guys next time. Adios, amigos. Bye-bye for now.